Good evening and welcome to Jesse Day Trades episode 5. Tonight I'm going to do a little bit of a midweek update on our trading activities this week so far. And then I'm going to go into Trading View and show the trading charts from today's price action. So, as I said in the last episode, I was out of town for a couple of weeks, as evident here with a bunch of zeros on the trading log. However, this Monday, the 13th of April, we were back in action, and we made 0.3% profit on Monday, 0.81% on Tuesday, and 1.37% today, Wednesday. So total profit so far this week is about $94, which brings us back up to about $622 so far this year, or about 30.60% year-to-date performance. So we're doing good. We're back on a bit of a win streak of profitability. Really, we had these two big losses in mid to late March. Ideally, we'd like to. I've been thinking that I want to keep the losses at about 3% or less, because I usually, with the quality of entries that we've been making lately, I believe if a particular trade goes 3% or more down, it's likely the wrong move. So I think we can probably cut our losses at around 3%. Obviously not what happened on the 20th of March, but we did learn as we are learning as we go. So yeah, I think going forward we'll try to limit it to 3% or less losses. But after those, we were back on a streak of 8 in a row days of profitability in terms of days that we've actually been trading in the market actively. All right, so now I'm going to go over to Trading View here in this other tab I have, and this is Tesla's chart today. Again, today is 15 April, and we had a huge upswing in the morning that lasted right around until about 10:30 Central Time today, and I had these areas of liquidity drawn out, and it's kind of hard to see. I'm going to delete some of these lines here to show where I had some different color lines here. I had some orange lines here, which if I go to the 1 day scale, in other words, each candle equals 1 day, and I zoom out here, it'll start to make sense where I got these orange lines from. These two right here that I'm putting the cursor over. They were generally areas of areas of resistance that I had seen on the higher time frame, like going back around February of 2025. Another time it hit it around May of 2025, and then this one here was around June of 2025, and then another time here in August and September of 2025. So that's where I got those lines from, and that was just kind of like a way zoomed out view of like, okay, here back in December 2024, it shot above this area, but then it came back down, and it's been kind of having a little bit of a rough time getting above this general zone until right around September 2025, and it obviously came up again, but then it came back down. And I was kind of treating those lines as, okay, if price is below this line and it comes up near it and bounces back, it'll likely continue down. And conversely, if it goes past that line and keeps going up, it'll likely keep going up because it's an area of resistance. So going back to the 15-minute time frame candles, I'm going to go back to today. Like always, I like to mark off the start of the trading day, which is 8:30 a.m. local time, Central Time, with a blue dash line like I have drawn here. So now that you have a little bit of context with these two orange lines, these horizontal ones, that's what those are. And then we have our normal lines of liquidity here, both green and red. So today you can see before market open, in the pre-market hours, you could see price was starting to push up against that orange line and come back down, and then it pushed it again, and then just kept going up, 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 and then it went up, like I said, right around until about 10:30 a.m. And I actually entered in inverse leverage Tesla, TSDD today. So basically, I shorted Tesla after it had that big jump up. And I'm going to go to the 3-minute time intervals here and show you a little bit more details of when I entered and exited that trade. Now, today I didn't have any lines of or areas of liquidity drawn up in the specific area that I was trading. I had some down here. And this was a red one, so obviously it went above it, but did not come back down like it other times where I would use it as an indicator to enter a trade. However, today what happened was there was a clear uptrend, and then a break of structure, and then that's when I capitalized. And I didn't take a whole lot of movement today, but still, even this amount of movement, these two horizontal yellow lines indicate where I entered and exited. So I entered around here when there was starting to be a bit of a break of structure, getting below this low here. We had a candle close right below this low here. Barely, it was just barely. And then I entered the inverse leverage Tesla, or basically the shorted Tesla, and then got out around here. And that was enough to make 1.37% today. So about $53 on the day. So it's not bad at all. But yeah, so like I said a little bit ago, it wasn't really a confluence of going above and back below an area of liquidity on the high side today, but there was another confluence of that break of structure that I saw and was able to capitalize on. And then after that movement, it kind of it went a little bit lower. I could have made some more profit, and then it kind of came up a little bit and started to consolidate as the afternoon on. But overall, not a bad day on the market. And now I'm going to delete the lines of liquidity for today's trading session, and I'm going to draw out the ones for tomorrow, and I'll do that on the video so you guys can kind of see in real time what that looks like, and just how quick it actually is, and how little effort it can take to have some very good situational awareness of where price action is likely to move during a particular trading window. So the first thing I'm going to do is I'm going to recycle my 0830 line and move it from the 15th to the 16th of April, right over here. So that signifies the opening of the market tomorrow. And now I'm going to go to the 4-hour time frame, and I'm going to readjust the view, and I'm going to start drawing out areas of liquidity with the horizontal ray indicator. So I'm going to start off by doing areas of liquidity on the high side, which will be red lines. So we're basically looking for relatively high areas, highs on the chart using the candles, which would be a green and then red candlestick pair. And then I'm just going to basically, between the green and the red candlesticks of that high, I'm going to pick the highest point of each of those candles or wicks, whichever it might be, and then draw that ray starting from there. So those are the relative highs, and then I'm going to do the relative lows next. And those will be red then green candles, and I'm going to mark those out as green rays. So that way I know it could possibly be a good time to buy or go long in those areas. So here's another red and green. candle pair down there. There's another one here, and again on these ones I'm picking the lowest point. So like there's a wick here and a wick here from the red and green, and then I'm picking the lowest of those two and drawing the ray from that point. All right, and I got a decent number of those. Here's another one there. And then now I'm going to go to the 1 hour time frame, and I'm going to basically rinse and repeat. And we're just doing it for the area relatively immediately before the next trading day. And this is how I get the those lines that you see on the charts. So here's an area of liquidity on the high side there with the red ray. And I think that's going to be about it. As you can see, there's not a whole lot of red rays today, as because we are getting above these orange lines I was telling you about. So we are kind of on the high side when you zoom out of the into bigger time frames. So it kind of makes sense that there's not a whole lot of recent areas of liquidity on the high side. So we do have, it seems, a little bit more areas of liquidity on the low side. But we will see how the market moves in the beginning of the day tomorrow and see if it maybe reacts off of any of these orange lines or any of these areas of liquidity. So that's basically how I get ready for the next day's trade. And I go back down to the 15-minute candles and then get it zoomed in so I can see the candle structure as well. And we basically wait till the morning and we'll see what the price action does. So going back to the trading log, again, we'll do a little review. So far this year of 2026, we have had 72 trading days. And of those 72 trading days, we have had 38 wins, 3 losses, 31 no trade days. And of those no trade days, we have 10 just from those last 2 weeks where I purposely wasn't trading because of the work trip I was on. So effectively, that number, you could even subtract that, lower that down to 21 no trade days. But keeping all things accounted for, 31 no trade, which gives us a win percentage of 53%, a loss percent of 4%, and a no trade percentage of 43%, with a daily average of 0.26% profit per day and a daily average of $9 profit per day. And then, as I spoke about earlier, the year-to-date performance is 30.6, which is not bad for being about a third of the way through the year. So obviously we might not continue to have this trajectory throughout the whole year, but if we did, if we're a third of the way through the year and we're 30% up, I mean, we could be looking at around 90% per return by the end of the year. It'll be interesting to see where we actually end up by come December this year. But it'll be interesting, and we are having a good track record so far, and we're dialing in our strategy in terms of how much of a loss we're willing to take when we're on any particular trade. And you can see before those 2 losses back in mid to late March, we got our portfolio value up to the $4,000 range at 42.02. Then we had to dip down to 36.16. But now we are starting to get close to the 4,000 range again. We're at 39.65 as of today. So hopefully we'll be back in the 4,000 sometime next week, and we'll see how it goes from there. So once again, I'd like to thank you for tuning in to episode 5 of Jesse Day Trades, and I look forward to speaking with you guys again. Thanks for watching.